Bitcoin has closed a daily candle underneath the 50 EMA for the first time in over 65 days. This generally represents a shift in strength and possible continuation in the direction of which it breaks, suggesting Bitcoin still has some downside potential. In today's video, we're going to be discussing our downside potential, our triggers, our macro trend, and even the possibility for bulls to reclaim control and what targets they could push to. Let's get into it. Okay guys, welcome back to the channel. Thank you so much for tuning in. I hope you're all having a fantastic day today. We're here to take a look at two particular major points on the chart. The first one being that 50 EMA daily close as represented by this daily candle close underneath that 50 EMA, and the second one being the RSI pivot below 62 on the weekly chart. These are two things we've been discussing for quite some time now, but we're finally seeing both of these validate and actually confirm. So we're discussing what this means for the higher time frame trend and what it could potentially spell for Bitcoin's price action. We're also going to talk about the short-term price action, as we have seen a significant breakdown and even seen that breakdown below $27.8 to $28,000 as we suggested. We're going to be talking about the high time frame trend, our lower targets, and of course, what will it take for the bulls to reclaim control on the smaller time frame, and of course, guys, on the higher time frame. A lot to get into it. If you're interested in this kind of content, smash the like button, hit the comment button, and of course subscribe to the channel. We do daily videos for Bitcoin, focusing on the charts, the data, the technicals, the facts. No emotion, no BS, no hype, no shilling, guys. Pure raw TA. You can also find us on Telegram if you're interested in more of this content. We post daily on here, the second link down below. You get updates, you get charts, you get analysis, you get information, educational posts, videos, and so much more. If you're interested in our VIP channel, you can join our VIP channel by contacting me via the pinned comment in the Telegram channel. You'll get access to two groups. Our exclusive VIP group here, where we post all of our trading signals, entries, targets, stop losses. Look at these trades, entries, targets, stop losses, massive profits in the last few days. We've been loading shorts for the last few days here. Exclusive altcoin analysis, and of course, you'll get access to 4 exclusive group chats, our trading and chart chat, our general chat, altcoin suggestions and analysis. We do complete analyses, and of course, additional content. Go ahead and contact me to get access. Let's get into the video, guys. Let's get started with the market data. So, of course, for the month, we've seen quite a volatile month so far, guys. We've seen, of course, that saying, sell in May and go away, is kind of coming true. We're down 5.53%. Liquidations are absolutely flying. $151 million in liquidations in the past 24 hours. That is up 16%. Of course, a lot of these being long liquidations. We can actually see the long to short ratio now starting to flip, meaning a lot of shorts are being taken, and these shorts are late shorts. A lot of late shorts are being taken. I've been suggesting to my members, we're not looking for new shorts here. We're holding onto the shorts we took while Bitcoin was all the way back up at this $29,000 range. We're holding onto those. We're looking to take profits. We're cutting those. We'll look for new shorts when we get this trigger below this level. Until then, entering late shorts is never going to be a smart idea. It could work, but over time, it's likely to give you a negative result. Moving back into this, guys, we can see 24-hour volume is up 31%. We're sitting at 88 billion now. Again, with this volatility, this liquidity coming in, we do see volume start to rise. Looking at our volatility index, we can see the 30-day volatility index is 2.29. It is on the rise, of course, as price becomes more volatile, as it speeds up, as we get these larger corrections, larger moves in either direction, volatility is going to rise. On the 60-day period, we can see volatility is actually falling a little bit. And again, that is because it is accounting for the consolidation period we have had during this entire phase, where the 30-day period is not really accounting for this section of price action over here. It's only accounted for the last 30 days. So this section of price action is here, is being accounted for, and less of this explosive rally has been accounted for, and therefore the 60-day volatility is actually falling, and that is a sign of weakness on the chart, and a sign of weakness we have been describing and talking about over the last few weeks looking at this particular price action. And finally, guys, moving into those liquidations, if we go to the smaller time frame on the daily, we can see majority of longs have been liquidated, a heap of longs have been liquidated, and we've seen a little bit of shorts liquidated, a little bit of longs liquidated ever since. But again, these shorts are starting to stack, which does concern me, but it's something to keep in mind. Let's go ahead and talk about the DXY. The DXY is still at support, guys. We are still holding support on the double bottom. Of course, the DXY has now opened, the market is active, and we are waiting for CPI. We said already, CPI is going to be absolutely huge this month, guys, because we're going to find out whether or not inflation is going up again or is going down, or whether or not it might even be remaining the same. And of course, as we know, inflation is a leading indicator for what interest rates will do in the future. We can see over here, this is our interest rate graph over here. And as we approach the pivot, as we are slow down on our consecutive rate hikes, meaning we went from 50 to 75, to 20, 50 to 25 to 25 to 25, we're kind of slowing down our consecutive increases. That is creating this hypothetical or expected trajectory, this perceived trajectory of what interest rates are going to do in the future. And currently it is pointing towards a pivot. And that is why the markets have rallied significantly. But if that changes, if that trajectory, if that perspective or perceived expectation changes, that can shift the systematic risk in the market, that can shift the perceived systematic risk in the market, and that could cause asset prices to fall. And CPI being a leading indicator of inflation is very important, because again, interest rates move based on what inflation is doing. So if inflation starts rising, we're more likely to see interest rates rise back up. If inflation remains the same, we're more likely to see interest rates remain the same or fall. If inflation is falling, we're more likely to see interest rates fall. And all of that process impacts asset markets heavily, absolutely significantly. So moving on to the DXY, if we do see inflation come out very good, which is inflation has come down, we will see the DXY most likely drop. The DXY drops, we're looking for a lower target in this range. If inflation comes out neutral or bad, we're most likely going to see the DXY rally. And if the DXY breaks this downtrending resistance, it could go quite high. We could actually see a rally up to around 105 over the next few weeks if it does continue upwards. And of course, guys, if the DXY rallies, that is not going to spell good news for the stock market. We're going to see rejections across the board at these major resistance zones. We're going to see pullbacks towards our uptrending support lines, the S&P 500, and of course for the Dow Jones. However, if inflation comes out good, the DXY crashes, we're going to see these yearly long neckline resistances break, and we're going to see the markets spin around and push back upward. So all hope is not really lost for the bulls yet. The bulls haven't really given up control. On the higher time frame, all we are starting to see again now is one of those dominoes fall over, another one of those dominoes fall over, and the probabilities are starting to shift now in favor of the bears for a higher time frame correction. So let's get into Bitcoin, guys, and we're going to go ahead and start off with the 50 EMA and the 62 RSI, then get into this chart, talk about 30K, talk about the technicals, talk about the zones, and then get into the small time frame and discuss what's happening next. So I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. 50 EMA is a massively significant point on a chart. You can see the 50 EMA represented by this red line. I'm going to go ahead and get rid of everything else so you can see it much more clearly. Let's go ahead and get rid of all of that. Perfect. Okay, every single time we close a daily candle underneath the 50 EMA, we have seen quite a strong pullback. This instance we saw around 60%. We saw on this instance here around 20%. You can see every single time we come under, we do generally get this continuation downwards. And again, the 50 EMA is not a high time frame moving average. It's not a small time frame moving average. It is a medium time frame moving average. It represents a shift in the trend strength. Now remember, if you've been watching our content, you would know trend strength or price action strength is comprised of multiple characteristics of price action. First and foremost, we have momentum. The key, this is the main one, it's the leading characteristics of price action. We have volume, liquidity, volume, speed, and velocity. Okay, these are characteristics of price action, momentum being the key versus leading. Then we have price strength. So if we know we have decreasing price strength because of loss of 50 EMA, which shows weakness, we can assume that these characteristics of price action are as well weakening. They're falling, and that is a sign of a bearish exhaustion or potentially throws the probabilities in favor of the bears for a rejection while we are at a major horizontal liquidity zone, that being 30,000. 30,000 is a major resistance. We have been in this $30,000 range over here for quite some time. It has acted as a resistance and slash support for over 854 days. So when we start to see momentum drop, volume drop, liquidity drop, speed and velocity drop, price strength weaken at resistance, the probabilities in favor of a correction are greater than the probabilities for a continuation upwards. And we've been saying this for a very long time. We've been saying this ever since we moved into this range over here, guys. We bought 16.5K, we've sold $30,000 for a reason. We don't just do this stuff randomly. The charts are telling us what to do. We're not always going to be 100% correct, but if we follow the charts, we're more often right than wrong. And that is what matters. It's about acquiring or creating an edge in the market that gives you an advantage over the general populace over a period of time, guys. And it's worked out perfectly in its favor. So the 50 EMA breakdown is a point of significance on the chart. It is something to be to some degree of concerned about. As like we said in yesterday's video, there is 3 points of confirmation we need for this trend to continue even further downwards. Number one, we need a break over the 50 EMA and a loss of 28,000. 28,000 being the lower range support of the 28 to 30,000 resistance. One tick done. Point number two, we need to see a break of the Gaussian channel midline. You can see we are actually currently retesting it. So that's point number two, we're coming up on it. And point number three, we need to break this local range low, which if I zoom in, you can see is sitting at 27,000. We'll talk about it on the short term. That is point number three. When all of those three things occur, the probabilities that would go to $25,000 is significant, absolutely significant. We'll see a very strong correction and a very fast correction to 25.2K if we get all three of those verifications. We currently have one, and we have the fact that the metrics of price action are dropping / weakening, meaning the other two have a higher probability of occurring than not. So it's not looking very good for the bulls. How can the bulls reclaim control? Well, if we know price action is moved by economic data, meaning economic data is the driver of price action. The latest piece of news we have is going to be CPI, which is a leading indicator for inflation, and interest rates. So we know interest rates being the main driver of price action, and we know the driver of price action can manipulate or influence the characteristics of price action, and the characteristics of the price action determine the price strength. We can say that if CPI comes out positive, very good, and that gives a positive reaction in the market and it allows perceived systematic risk to drop further, we could see the characteristics of price action flip around bullish and push the price up. That is number one. That is from an economic news driven perspective. Number two, from a price perspective, we need to see the momentum flip. Remember, momentum is leading for all of these other characteristics. So for momentum to flip positive, that would mean volume, liquidity, volatility, speed, and velocity would flip positive, and thus the price action would flip positive. So for that to occur, we need to see the downtrending momentum that we have been experiencing ever since January 2023, right over here, flip positive. We can see it on the markets over B. We can see on the RSI. We need to see the price on the RSI push above that downtrending resistance. That will flip the price action positive. That will put this price action back in the bulls' control, and the bulls will be able to push it back above 30,000, potentially close it above 30,000 monthly, and everything will be happy and dandy for them, okay? Until that happens, like I've been saying, weakness is weakness until it's not, resistance is resistance until it is not. Do not fade resistance, buy support, sell resistances, do not let emotions get involved. Let's move on to the 62 RSI. As we've been saying already, guys, the 62 RSI is another major key trigger point. A lot of people in my video the other day were saying, well, I haven't even paid attention to this. I didn't even know this was a thing. And, you know, you have to look at things that people are looking at. A lot of the stuff I look at on the RSI, as myself, I'm a momentum analyst. I'm a momentum trader. I trade based on momentum. That is how I trade. So RSIs, Marcus OBs, volume indicators, volume ranges, liquidity ranges. These are all my kind of thing that I like to use personally. So you probably won't see a lot of this anywhere else. But you're looking at RSI shifts particularly. And the RSI is a fantastic indicator to predict shifts in momentum. Not so much when momentum is moving down or momentum is moving up, but when the point shifts in strength. When do we go from a strong positive trend in momentum to a weak positive momentum trend or a weakening positive momentum trend? Those shifts in momentum can be leading for price action. And as we saw over here, a break of the 62 on the weekly chart, we saw a breakdown, we saw a pivot, we saw a rejection, was a major shift in that momentum. And since then, guys, we have already seen a 9% correction for Bitcoin. Crazy stuff, crazy stuff. If we look historically, we can see the smallest correction we have seen from this since 2018 was 20%. If we see a 20% correction, where does that take us? Well, that takes us to 24.4K. What is 24.4K? Well, 24.4K is a 1 year long, or very close to it. I think it's like 250 days or very close to it, 330 day. So 330 day long major neckline of support. This is the 24 to 25.2K level of support. If we go to a smaller time frame, you can see according to the VRPV below 26.8 to 27, we have a gap. Where does a gap fill? No surprise whatsoever, 25.2 to 24.4. There is absolutely no surprise there, guys. It lines up perfectly. Our hypothesis with the charts, with the data, it all lines up saying the same thing. So definitely watch those levels, guys. Very important stuff coming from a chart. It's getting quite spicy. It's getting quite dangerous for the bulls. Like I was saying, the days are numbered for these bulls. They do have to start taking control, or we are going to see a continuation to 25.2 to 24.4. And now, before we get into the small time frame, let me clarify. The uptrend is still intact for now on the daily chart. However, we are massively losing this uptrend rapidly, okay? 50 EMA, midline Gaussian channel, 27K, lose that, uptrend's gone. The weekly uptrend, however, is actually still intact. Now, the weekly uptrend will remain intact, excuse these drawings, until the midline on that Gaussian channel is lost, okay? You see where that midline is, it's sitting around 25.2K. Again, absolutely no surprise, it all lines up. We lose 25.2K, we will deviate above this 360-day resistance and we'll be pushing back into this consolidation range over here, potentially putting it at massive threat for a rejection lower, guys. So the bulls do have control on the weekly until 25.2K is lost. On the daily, the bulls are losing control rapidly, okay? Absolutely rapidly. Going back to this high time frame chart really quickly, you can see if I bring that Gaussian channel back up on this chart, you can see once more, we've pushed up through the channel and we've got rejected on it. So we do need to break above that level. Where is that level? 30,000. If we line up to 30,000, where is 30,000? It is the yearly low of the prior bull run high. 30,000 right over here. Every time we break above 30,000 monthly chart, we end up continuing upwards more times than not. So all of these levels are massive levels of confluence, massive levels of important, not random cherry pick numbers, not random diagonal trend lines. All these levels are significant. If you're not watching these levels, draw these charts up. Map my charts out, copy my charts. You need to have these levels in. I've been saying this the entire, well, ever since I'm on YouTube, I've been telling you guys, copy these charts because these charts are technically and structurally accurate. If you followed these charts, you would have bought at 16.5K, you would have sold at 30,000. If you followed these charts, you would have sold at 64,000 at this breakdown point here. You would have bought at 18 and 16,500. There's so much value in these charts, guys. I highly recommend going ahead and copy them. Let's go into the short-term time frame. As you can see, Bitcoin saw a proper breakdown. a fantastic breakdown. We saw the measured move actually complete to quite a high degree of significance. As that breakdown, our measured move took us into this range. In fact, we said in our video, if we break into this level here, we are not going to hold it. We are much more likely to push through it, and we have seen that push down. Currently, we are forming a possible, and I say possible because it's not a validated channel yet, but we are developing a possible bullish channel. This is a descending channel. Of course, this represents bulls are starting to gain strength. More so, it actually represents that bears are starting to lose pressure, and that can kind of develop into bulls regaining strength again. But the bulls don't really have strength on this range until 29,600 is broken. If 29,600 is broken, that will facilitate the break of the RSI, and that will push the price higher to 32,000, potentially to 40,000, as well as $38,000. Until then, we are in this downtrend, guys. And if we do break below 26.8 to 27, we're going to see not only a correction, but it's going to be a fast and volatile correction. Moving on to the smaller time frame, I would not be taking new shorts here unless you are scalp trading. If you are looking for brand new shorts here, you, my friend, are late to the party. You're late to the party. And you don't have to be worried about catching every trade and catch every move. If you miss a move, wait for the next one. Do not chase the market. Look for opportunity and execute. I'd be looking for new shorts if we close under here. Until then, I'm holding my current shorts. I have many shorts going. Got heaps of shorts on VIP from this level over here. Absolutely a couple over 100% profit, looking really good. But I'll be holding my shorts because I do expect this downtrend to continue into this range. And I think if we do close above this downtrending resistance, you can see our downtrending resistance here, that could potentially give the bulls the possibility to push the price upwards. But this is resistance. This is resistance. POC is a resistance. 29.25 to 29.4 is a resistance. 29.6 is a resistance. We have a lot of resistance above us, including this whole chunk of volume right above us, that bulls will need to push right through to get the price going again in their favor. And that is just a hell of a lot of resistance. And if it happens, it's not going to happen quickly, and we'll have a lot of time to prepare and take longs if it does. It is a possibility to occur, but I wouldn't expect it to occur unless this trend line is broken. Now, considering the amount of distance we have from where we are here to 27K compared to our date range trend, or the date of where the price action is to this trend line, we're looking at about a day and 18 hours. So unless we move sideways for a day and 18 hours along this range, potentially even 2 days, we're not really expecting a breakout of this range very quickly. It's very unlikely we just see a massive green candle that pushes up like this. It'd be quite obscure, especially because there'd be no real trigger for that unless it was a short squeeze, but even then that would be quite obscure. It could potentially occur by CPI, or CPI data could trigger that, but again, it is still unlikely, as we do have to respect the trend, and the trend is down until it is proven not. When is it proven not? When that downtrend breaks. Thank you so much for watching, guys. I hope you enjoyed. Check out the Crypto Academy courses at gmail.com. We teach you how to trade, educate you on market structures, candlesticks, patterns, trading mindset, market psychology, risk analysis, and so much more, guys. If you are new to trading, brand new to trading, or get less than about a year experience, this is the place to you. If you've been in the market for a long time, but you know nothing about technical analysis and you want to learn how to do a TA, this is the place for you. We give you a good understanding of the foundations of analysis that will set you on the correct trajectory and course to execute proficient and high-level trades in the future, guys. Go ahead and contact us at this email over here via the website down below. Thanks for watching. See you guys tomorrow.